Hello, and welcome to day one of the Moss Adams Private Foundation Virtual Conference. We're pleased that you're able to join us. We have 4 sessions today, totaling 4.5 CPE credits for today's portion of the conference. For the National Association of State Boards of Accountancy, to qualify for these credits, you must attend the 1 credit sessions for a minimum of 50 minutes and respond to at least 3 of the polling questions in each session. For the session offering 1.5 credits, you must attend for a minimum of 75 minutes and respond to at least 5 polling questions. There is a link to the agenda in your handouts window showing a 40-minute break. During that break, we will be switching to the afternoon console. There is a link to this console that in your current console that'll take you directly to the afternoon sessions. And if you have trouble with that link, you can also find it in your email and your calendar appointment. And now that we got all of the housekeeping items out of the way, I'm going to play a brief video.
Welcome, and thank you for viewing our webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now I'd like to turn it over to Wendy Campos, partner and Foundation's National Practice Leader, to get our conference started. Wendy?
Great. Thank you, Amy. Welcome. Good morning. Thank you for joining us for the Moss Adams Private Foundation Conference. This is our 2nd annual, and I'm excited that you're joining us. We have a robust agenda planned and a fantastic lineup of speakers, and I hope you're all looking forward to it. And now I'd like to introduce our first session. We're going to talk about taxable expenditures. So situations where a private foundation may have a taxable event and the internal controls that should be in place to mitigate these types of expenses and taxes. With that, I'd like to introduce Pamela Alexanderson, Tax Director with Moss Adams, and I will turn it over to you.
Thank you, Wendy. Really happy to be here with everybody today. We're going to go ahead and do a quick round of introductions, and then we'll get into all of that fun technical content that Wendy mentioned. So as she mentioned, my name is Pam Alexanderson. I'm a director in our exempt services group here at Moss Adams. I'm going to turn it over to Mike to introduce himself.
Hello, everyone. Good afternoon or good morning, depending on where you are. It's afternoon for me. I'm based in Louisville, Kentucky. I'm a law partner with the firm Wyatt, Tarrant, and Combs, and practiced for many years in Chicago and DC with big international firms. Followed my history professor wife out to Louisville about 8 years ago and just love it here. So I'll turn it to Claire to introduce herself next.
Thanks, Mike. Yes, good morning. My name's Claire Hilleary. I'm a director here at Moss Adams in our business consulting group. Primarily work in the internal audit controls and grant compliance realm. So really excited to be with you all this morning. Chelsea?
Thanks, Claire. Nice to meet everybody. I am Chelsea Ritchie. I'm a senior manager in our business consulting service group. Like Claire, I dabble in internal audits, specifically around internal controls. And then I also do policy and procedure work. Carla, over to you.
Carla, I don't
Carla,
think we can hear you.
you may
Sorry
be on
about
mute.
that.
There you go.
Start again. Good morning. My name's Carla Romero. I'm Executive Director of the McCune Charitable Foundation. We are based in Santa Fe, New Mexico. We're a place-based funder. We are also clients of Moss Adams, and so really happy to be here and learn and share with everyone. So I'm going to pass it on to Mark.
Good day, Mark Scheffler, Executive Director, Timken Foundation of Canton. We are based in Northern Ohio. Mike Fine, who introduced himself earlier, serves as our legal counsel, so good working relationship there. And we give in 45 communities where the Timken company has significant operations. So it's a family foundation, but the family that founded the company has continued to support communities where the company operates, which takes us into North America, including Canada and Mexico, as well as Europe and Asia.
All right, well, thank you all. So our agenda today is we are going to do a little bit of slide presentation first, just to hit some of the basics and maybe get into a little bit of some of the intermediate technical topics. So Mike's going to take us through an overview of taxable expenditures. And then Chelsea and Claire are going to go through some best practices for internal controls so that you can avoid those nasty taxable expenditures. And then we're going to open it up to a panel discussion with everybody that we have here presenting this, talking a little bit about how do you mitigate some of those events, what happens if one occurs, how do you report it, and then just talk about some other common pitfalls. So with that, I'm going to turn it over to Amy for our first polling question.
All right, so the first polling question is, what is a taxable expenditure? And your options are, I have no idea, reasonable and necessary business expense, amounts paid for prohibited transactions. And the polling questions are located right on the slides that we're presenting. So make sure you choose your answer and then hit the submit button so that you can get your CPE. We'll give it a few more seconds here. All right, here are the results.
Great. I'm actually happy to see that there are some of you that don't have any idea. Hopefully you'll learn a lot from this presentation. And then obviously the majority of you, as you see on the slide, reasonable and necessary business expense or amounts paid for prohibited transactions. So it really is an amount paid for prohibited transactions. So hopefully a lot of you on the call will actually learn quite a bit from this presentation. So with that, I'm going to turn it over to Mike.
That's great. Thank you, Pam. So yes, this amazing panel of folks is here to help, especially for those who answered, I have no idea. I am going to try to move pretty quickly through the overview material and leave more time for our Q&A discussion. But as the poll suggests, these are taxable expenditures are amounts paid for prohibited transactions. And this slide here lists some of the major categories of taxable expenditures, the ones that are most frequent. And I'm just going to touch on a couple. The first, grants to individuals for travel or scholarships. Those are automatically taxable expenditures unless your foundation has prior approval from the IRS. And the IRS is mainly focused on those scholarship selection procedures. If we have any company-sponsored foundations out there, you want to be particularly watchful over scholarship grants when some of the beneficiaries are children of employees. There are some strict qualification standards in those instances, so watch out. I also want to touch on the third bulleted category here. Those are grants to organizations. And you might think, well, we're a grant-making organization. That's what we do. Well, not every grant that you make is potentially subject to taxable expenditures, right? There are a lot of exceptions. That's always the fun in the private foundation rules, the exceptions. And here there are exceptions for IRS-recognized public charities. There are exceptions for certain kinds of supporting organizations. I'm not going to put you to sleep talking about supporting organizations today, but we'll save that for nap time some other time. But what I do want to focus on are the private exempt operating foundations. So these aren't your run-of-the-mill 4942 operating foundations. These are a specific subgroup of those exempt operating foundations. These are things that have been publicly supported for 10 or more years. They have governing bodies that are broadly representative of the general public. They don't have officers who are disqualified persons. So it's a very special subset. You might think, well, we're making a grant to an operating foundation, we're okay. No, it has to be to an exempt operating foundation. So watch for that distinction there. If we could move to the next slide. So if a private foundation makes a taxable expenditure, then both it and the organization managers, foundation managers who knowingly and willfully approved it can be subject to excise tax. The foundation manager is not liable if we're able to show that the expenditure was due to some kind of reasonable cause, or it wasn't a willful act, there was no neglect on the part of the foundation manager. But if you might even have a foundation manager who is acting on the advice of counsel, where counsel gave a reasoned legal opinion. And in that case, the foundation manager is also not liable for the tax. When there is some doubt, when there's some question about whether the transaction you're engaged in could be some type of taxable expenditure, you want to talk to advisors who are knowledgeable about these rules and can point you in the right direction, because it can be quite costly. Not only do you have the tax, which there's, just like a lot of other private foundation excise taxes, there are two tiers. There's a first tier tax of 20% of whatever the amount expended. And then there's a second tier tax of 100% if you don't correct the taxable expenditure in the right time. And so you might ask, well, what's the right time? How will I know? Well, the IRS is supposed to let you know. They need to issue you a notice of deficiency. And once you receive that notice of deficiency, now you've got 90 days. That's when your correction period ends. If you decide, I don't agree with you, IRS, and I'm going to fight you, you can petition the United States Tax Court, and that will delay and extend the correction period. So you have time to work through these issues in tax court until the tax court's decision is final. The correction period extends. There are some other key terms here that panelists may use that you might want to familiarize yourself with. Reasonable cause. I kind of touched on that a little bit. But if a foundation manager is acting in the ordinary business, with ordinary business prudence, they're very likely to satisfy that reasonable cause and have their behavior excused from potential excise tax exposure. Willful agreement, that's the foundation manager's agreement to make a taxable expenditure. It has to be willful, it's not voluntary, it has to be intentional. The IRS doesn't need to show motive here, but there does need to be some kind of extra fact that makes the foundation manager's acceptance or approval of the expenditure more culpable, let's say. I know it's not criminal law, but so sometimes, ignorance can be bliss. Maybe you don't want to be listening to us today, learning about taxable expenditures, because now you know what these rules are. But that's what we're here to do, is to help you. So let's move to slide 7 and point out some of the pitfalls with which you may run into trouble. And the funding community knows all about scholarship issues, so I don't need to list that here. Obviously that's number one. But in my years of experience, most funders know about those rules, and so this is where I see concerns. Why don't we drill down on the first one, which is influencing legislation, and we'll move to the next slide with a quote from one of my favorite experts. No one ever said in lobbying that if they did so, it would be illegal and it could compromise the foundation's tax-exempt status and subject it to excise tax penalties, which are the taxable expenditure rules we're talking about today. So that's a fallacy. Foundations should not be engaging in lobbying, but they can make grants to organizations that do lobby. And that's okay, as long as the grant is not earmarked for use in supporting those lobbying activities. And if we move to the next slide, I can tell you about a whole host of things that don't even count as lobbying, but you might think they're lobbying when they're not. So the definition of lobbying has 4 primary exceptions. 2 are widely used by private foundations, the first bulleted and the last bulleted. And then 2 are more narrow in scope. Those are the ones in the middle. We're going to explore one of those a little bit later on. Just to highlight the first bullet, so nonpartisan analysis, study, or research. That means you've got an independent and objective exposition in a particular subject matter. These are things that might otherwise qualify as educational in nature. It counts as a nonpartisan analysis because even though you can tell people what your point of view is, you have to have a full and fair exposition of all the relevant facts and all the different positions so that the individual reviewing that analysis, study, research can form an independent opinion or conclusion by themselves. Sometimes organizations will walk this boundary, and what they need to watch out for is including any communication that reflects a view on specific legislation. You don't want to be deemed to directly encourage the reader to take a particular action on legislation, because crossing that line means that all the money you poured into that analysis, study, or research won't qualify under this exception anymore, and it will constitute lobbying, and that's going to be a problem. If you're looking for examples of foundations that do this well, the W.K. Kellogg Foundation is a great example. They issue lots of reports. They look at current policies in important social areas and try and lift up and identify important data. So that's one good example to point you to. If we move to the next slide, we'll talk about program-related investments, or PRI. I know we'll get into some more PRI discussion here later, but what I want to do is at least make sure we've got a baseline understanding of what these things are. These are investments, the primary purpose of which is not to make money, but to accomplish some type of charitable ends. And of course, as we just finished talking, no part of the investment can have as its purpose the goal of influencing legislation or participating in a political campaign. The most common examples of PRI I've listed here for you. They include interest-free educational loans, low-interest loans to small businesses that who may not otherwise be eligible to receive funding, or maybe the funding they would otherwise receive would be at such a high interest rate, that it wouldn't be as viable for the organization. So especially with interest rates being where they are now, PRI can be quite attractive to foundations to help their organizations accomplish their mission. And remember, we're talking about what it means to make a grant under 4945. Well, the definition of grant for these purposes includes PRI. And so that's why we need to watch out here. On the next slide, last but certainly not least, we have international grant making. If you're going to make a grant to an international recipient, you can do it one of two ways. You can exercise expenditure responsibility, or you can try and obtain an equivalency determination. And the expenditure responsibilities are very specific in form. There's a lot of oversight and monitoring before, during, and after. You have to have a written agreement in place. It can be difficult, and a lot of private foundations don't want to deal with the expenditure responsibility rules. Well, the equivalency determination approach relaxes that standard, assuming that you can demonstrate this non-IRS approved recipient would have been the equivalent of a US public charity if it were formed here. And to do this, the granting organization has to have a good faith determination that that grantee is the equivalent of a public charity. And this is often done based on affidavits that you receive from the grantee organization and the opinion of counsel or other qualified persons on which the foundation relies in making its international grant. So with that, I think we are up to our next polling question. Amy, why don't I turn it back over to you?
All right, thank you, Mike. So the second polling question is, which activity would be considered lobbying? And your options are nonpartisan analysis, study, or research. B, request for technical advice or assistance. C, contacting the public, urging them to vote a specific way for legislation. Or D, examinations and discussion of broad social, economic, and similar problems. And just as a reminder, if you would like to receive CPE credit for this particular presentation, you will need to respond to at least 3 of the 4 polling questions. It looks like most of you have responded. We'll do another 5 seconds to make sure you get your credit.
Okay, as those polling results are coming in, I'll just note here in Kentucky, we're already getting ahead of ourselves, and the next General Assembly won't begin until January, but a lot of the groundwork happens now, of course. We also happen to have a gubernatorial election coming up in November that I think will be closely watched. So let's see, how do we do? Or maybe this is a reflection on how I did. Okay, I feel pretty good. 87.5% of you identified that lobbying is when you contact the public and urge them to take a particular action on a specific piece of legislation. Well, great. Thank you for that. And thank you, Amy. And now I want to turn it over to Claire and Chelsea for a discussion on internal controls.
Perfect. Thanks, Mike. Yeah, so we are going to pivot a little bit now and talk about some of the risks associated with taxable expenditures. So, while foundations enjoy a certain degree of flexibility in their operations, they're also bound by these strict regulations concerning taxable expenditures. Here we cover the top 5 risks, and then I'm going to pass it over to Chelsea to discuss some great internal controls that can be used to manage these risks. So in my opinion, the first one and the most immediate risk for noncompliance is related to financial penalties. Fines and penalties, they're going to vary depending on the nature and extent of the violation, but they can be substantial, and financial setbacks are only going to drain resources and divert funds that could have been used for the purposes of the foundation, and thus, hampering the primary objectives. The second one we have listed here is a loss of tax-exempt status. The tax-exempt status, of course, is a cornerstone for private foundations. It allows them to operate efficiently and channel more funds towards their causes. So continuous or significant violations may trigger a review by the tax authorities. And if they're found to be persistently non-compliant, it might result in losing that tax-exempt status. And then it's, the organization becomes just unsustainable. The third one on here, and I think this is very relevant for today's day and age of information, has to do with reputation in the community. Because information is so widely shared and available with the internet, and news about noncompliance can really spread like wildfire, and it really can paint a negative light on a foundation. So this might deter potential donors, making it challenging for the foundation to raise funds in the future. And then also existing beneficiaries or partners or folks that are working with the foundation might want to distance themselves just because of the perception of any sort of bad news that they see. The fourth just has to do with legal risks. So, beyond regulatory penalties, foundations, they can find themselves part of legal battles that are, as a result of severe violations. And as we all know, any legal proceedings are very time and costly. So that's just going to further divert the resources and attentions away from those core objectives. And then lastly, impact on grants and donations. Taxable expenditure violations can affect the mechanics of how foundation operates, and it may jeopardize existing grants and lead to the return of funds, or even, hinder in the process of future grant-making opportunities. So any donors seeing any inefficiencies or legal troubles, once again, are going to really think twice about whether or not they want to be involved or participate in that way. So in my opinion, those are the top 5 risks that foundations face with regard to taxable expenditures. Let's do a polling question, Amy, to see what the audience thinks about their exposure susceptibility.
All right, thank you, Claire. So the third polling question for this presentation is, do you believe your organization is susceptible to taxable expenditures? And then your 3 options are A, I have no idea. B, we have some internal controls but need to learn about them, about more. Sorry about that. Or C, we have everything covered. And while you respond, I also want to let you know that there is a copy of the agenda in the handouts window, and this does have links to our presenters' bios and is available to download if you want to check that out. All right, most responded pretty quickly here. So here are the results.
Okay, perfect. Well, this is another great springboard then to the next part of our presentation. So on the next slide, now that we know kind of what can happen, let's just turn more to preventative solutions. We note here on this slide that a strong system of internal controls is really focused on the education, clear policy guidance, regular monitoring, and then engagement with experts to help navigate these tricky waters. Let's do one more poll, Amy, and then we'll turn it over to Chelsea for some direct examples of great internal controls.
All right, so the last polling question for this presentation is, do you believe you have adequate internal controls in place to help mitigate taxable expenditures? And your options are A, yes, B, no, or C, I sure hope so. All right, we'll leave this up for a little bit longer. I do want to remind you that you can submit questions for the presenters in the Q&A window. We do have quite a bit of content to get through, so if we don't have time to respond, we'll try to follow up with you after this conference, or we'll add them to the Ask the Expert session that we're doing tomorrow or later this afternoon. All right, here you go.
Wonderful. Thank you, Amy. I sure hope so. So I think this is a really good preface to looking at some, internal control best practices that any foundation, regardless of size, should really, strive for. And we've listed 12, and I think the first 6 on this slide are really they kind of go together. So, making sure that you understand those rules and regulations, and not only for, the tone at the top, but also staff. We want to make sure that they're well-versed in specific rules that apply to us, specifically, if it's both for federal and for state. Number 2, and this one, is near and dear to my heart because I do this day in and day out, but, having detailed policies and procedures. This will really help you establish those clear guidelines, on how to handle those expenditures. What constitutes a taxable expenditure. And it gives you the opportunity, to hand this to anybody on your team. And, it lays out the, your policies of what to expect for these areas. And that kind of goes into number 3, which is regular training and education. So I am a huge proponent of having continuous education for staff. And this can go over stuff as those rules and regulations, as well as policies and procedures. So, I think reminding folks of this stuff day in and day out is a really good way, maybe having a lunch or whatnot to go over this continuing education. And I think, strong documentation practices are always so important. And especially we see this in like smaller foundations where it's a lot of, knowledge, historical knowledge, or one person knows everything, but is it documented? So, making sure that you maintain records on transactions, big decisions for the foundation, the rationale for these decisions is a really, really good best practice to have. Segregation of duties, dividing those financial responsibilities among, different individuals really does help minimize the risk of error and fraud. And I think a way to do this is when you're starting your policies and procedures and typing those out, it kind of gives you a visual of, okay, do we have some segregation of duty issues that we need to work on? So I, kind of correlate those two. A really other good best practice is internal auditing and monitoring. So, this can be done within the foundation level. You don't need to have another expert come in, but really making sure that you are holding others accountable with regular reviews, of financial transactions. And, this kind of makes sure that everyone knows that they could be reviewed at any time and giving their best foot forward. So going on to our last 6, when in doubt, always engage with the external experts. Just like this panel right here, we have lawyers, CPAs, tax experts. Really consider engaging to review those policies and procedures, or if you have any, complex issues that you want to discuss, rely on them to do the heavy lifting in those areas. Use of technology. So, this is something that we see day in and day out. Lots of foundations are always struggling with trying to find the best, fit software, but, utilize a financial management software that helps really tailor those needs of private foundations. And I think, specifically, how are they helping you track your grants? Making sure that you're following specific regulations. These are really, important topics that we can rely on technology so that we don't have to do all the heavy lifting. Ethical guidelines and whistleblower policies. So regardless of size, this is so important for every foundation to have. And I think it's important, oops, it looks like we just switched back. There we go. I think it's important, that it shows that everybody within the foundation has, an ethical backbone. And it's not only important for inside our foundation, but for others outside of our foundation to see how we, treat ethical issues and what our ethical policies are. And, showing board oversight. So really ensuring that your foundation's board is actively involved in, overseeing compliance with laws and regulations. These are our people that we can rely on. Hopefully they have some knowledge of this area, and, we can ask them those oversight questions, when they come to need. Another one, collaboration with grantees. So, if applicable, if you're working with grantees, make sure that you're working really closely with them to ensure that they understand your rules, you understand, their policies and procedures, and that you're complying with each other. So you want to make sure that, any non-compliance can also, they could affect your foundation. So you want to make sure that you both have strong, both ethical as well as financial policies and procedures in place. And last but not least, disaster recovery and data security, especially in this day and age. You see everything, lots of data breaches in the news, but really making sure that you implement controls to safeguard financial data. And if you also need to make sure that you have a recovery plan in place. And I think this is a really big one to asterisk and say, consider getting some external experts in there to help you in this area. There's, lots of people that can help that definitely would, make a difference in the long run. So with that, Pam, I think I'm going to bring it back to you for the panel discussion.
Thank you very much, Chelsea. So hopefully you've learned a little bit about taxable expenditures, what they are, if you do any direct lobbying, if you give grants to individuals, if you give grants to non-501c3 public charities, all of those may qualify as taxable expenditures. But as Mike talked about, there's definitely some mitigations to all of those as well. So I'm going to start off the panel discussion with a question to Mike. So Mike, you spoke about some of the exceptions to lobbying as taxable expenditures. If a foundation has been asked to present to a legislative body to provide advice on low-income housing, which is directly related to their exempt purpose, how might they go about documenting their efforts so that it is clear that that specific activity wouldn't be a taxable expenditure?
Yeah, and that's what a wonderful opportunity that is for the foundation to talk about the housing needs, and those are certainly critical in a lot of communities in this country. Foundations are allowed to spend funds and provide technical advice or assistance to government bodies. That's one of the exceptions to lobbying. The key here is that the governmental body needs to be reaching out to you, the private foundation, for your insights. And what the foundation should do is ask for a written request from that governmental body to appear. When that happens, now the foundation can provide its insight. Maybe there's some congressional committee that's preparing legislation, even if the information happens to come with a particular slant, that's okay, because now you've been asked to provide technical assistance or guidance, and you have that in writing. So that's always the thing that I look to first, Pam.
Okay. I mean, that's really great to know, to actually have a written invitation. So certainly foundations would be well within their right if they get a request to go back and ask for something in writing with specific guidelines on what they're supposed to present. Does that sound right?
Yeah, absolutely right.
Okay, great. Okay, Carla, so have you had any taxable expenditures in your foundation's activities? And if so, how do you document those activities to ensure they're reported correctly? If you haven't, what do you do to ensure that you don't have a taxable expenditure?
All right, thanks, Pam. So can you hear me okay this time?
We can.
Okay, all right. So we don't currently have any taxable expenditures at the moment. So we've been really taking steps to try and avoid them. So for example, we're just very transparent about what we fund and what we don't fund. And we share this information on our website that outlines who's eligible to apply. We've added these types of expenditures to our do not fund list so that folks know that we don't fund direct grants to individuals, grants for political campaigns, lobbying, or for for-profit entities. We are also just clear that we do fund 501c3s and tribal and government entities. We also do fund some organizations that have their 501c3, that do not have their 501c3, but are doing charitable work. And so we do this through a credible fiscal sponsor. We actually have some really great fiscal sponsors in New Mexico that can shepherd the grant process and often serve as mentors for these organizations who may be seeking 501c3 status at a later time. And then, as Mike mentioned previously, there are some exceptions to lobbying that we've supported, such as the economic and educational types of impact studies. So we have funded some of those in the past just to get a landscape of what's happening in New Mexico. Another way we avoid taxable expenditures, aside from being transparent, is that we do a charity check for all our applicants to ensure they're eligible or their fiscal sponsor is eligible to receive a grant. And so we have Candid, which is built into our grant making platform, Foundant, which makes it fairly convenient to do that charity check before we even start the review of the application. And then if there's any question about eligibility, we do further due diligence. So for example, for a tribal government or government entity, we have to dig a little deeper just to get more information about those entities. We also require our grantee partners to sign a general terms and conditions agreement, which includes the prohibited uses of the funds, such as lobbying, propaganda, etc. So, as well as requiring the grantee partner let us know if their status has changed at all. And then we actually have pretty good training, and we maintain a culture of thoroughness here. So we take our time before making a grant, and we have a small staff. So, it does take some work to ensure that there's a couple of sets of eyes that do the review. So as a final check, once our director of grant making puts together the grant file, and we still are using paper files in this instance. Our bookkeeper reviews the file for the charity check document, the signed general terms and conditions, and make sure all the documentation looks good before we cut a check. So those are some of the ways that we have some good practices, policies, and procedures in place to ensure we're not, out of compliance.
Yeah, it definitely sounds like you have a lot of good policies in place. One thing you mentioned was the use of a fiscal sponsor, and it sounds like you have some regular partners that you use in that role. For those organizations that may not have a relationship with a fiscal sponsor, is there any tips that you might have in terms of helping them find somebody so that they can get the grants to, those activities that they're passionate about?
Yeah, so since we only fund in New Mexico, there are a couple of trusted partners that we work with. So New Mexico Foundation, they're a great partner and often a good fit for many of the organizations seeking a fiscal sponsor. So we can refer them to them or another trusted partner. And then they, see if there's a good fit, right? So they can meet and talk and decide whether or not it's a good fit for their organization.
So I think you bring up a good point. Really, a local community foundation would be a great place for a foundation to start if they've got, a grantee in mind, but really don't want to have to do the taxable expenditure portion if that grantee doesn't qualify. So
absolutely. And community foundations have been a great resource. So there's Santa Fe Community Foundation, Albuquerque Community Foundation, as well as the statewide foundation.
Great. Awesome. Well, I do have another question for you because I do know that you have in the past made some program related investments. Were you able to treat those as qualifying distributions? And if so, how did you determine that they were program related investments?
Yeah, so this happened, way before my time, but we did enter into a public-private partnership, which was a real estate development that was addressing a blighted area in downtown Albuquerque, New Mexico, and our primary partner was with the city of Albuquerque. And so it took a long, kind of a lengthy and deep legal and accounting review and significant board engagement to determine that this was something that the foundation wanted to enter into. And there was a very detailed master development agreement. And so the way it worked out, our PRI was a disregarded entity for tax purposes. And so we had separate accountants, freestanding audit, which was later consolidated into the foundation's audit. We have now wound that down. We've sold off all the assets and paid off all the related debt. But I think the word of caution here is really, it is a complex undertaking. And so that legal and accounting expertise and guidance kind of every step of the way, and making sure you have solid governing documents and assistance with reporting and tax returns was critical. And so we did treat that as a PRI and not as a grant per se. So in our 990 PF, we treated it as a qualifying distribution. So it was above and beyond our 5% required distribution. So we, are kind of banking that. And now that we've wound down, there will not be any recapture or anything like that. But it was treated as a qualifying distribution.
Okay. So it sounds like document.
Absolutely. Right. And getting advice along the way. I think that's been critical for us through the ramping up and the winding down piece.
Wonderful. Well, thank you very much. I'm going to switch gears just a little bit here and go to Mark. So Mark, can you describe some of the international grant making activities that you have at the Timken Foundation, and what do you do to ensure those grant monies are spent for foundation purposes?
Sure. So we give in communities that have significant company operations. So these range from Eastern Europe to different communities in India to China, and really most of them are for capital projects, and I think that really helps us because I think if it's non-capital, programmatic or operational, I think there's probably greater susceptibility to kind of mixing and mingling political or other kind of forbidden activities with the programmatic activities that are occurring. Whereas, if it's a capital project, it's pretty well self-contained. You have a very tangible read on, okay, did they build the building or did they not? Is it serving the function that they said it would serve? So I think just by having an emphasis on capital projects, we get a fair way down the field in the sense of protecting ourselves from inappropriate expenditures. And but then we also have local feet on the street. And I think for any international context, that's really important. So having partners who, they don't work for us. It's kind of a volunteer activity for them that is in relationship to their professional role, but not part of their professional role. So we have the benefit of very strong Timken company leaders who are in those communities every single day and have eyes and ears on the projects, and so they assist us from sourcing to completion in the projects, and we've done a pretty intentional job of educating them about the types of projects that we can support and the types of projects that we can't.
Yeah, having those people actually there is probably priceless to you, because obviously if you're having to travel all over the world just to see how a construction project is progressing and making sure it's used for what you wanted it to be is expensive. So,
indeed, yeah. I mean, we find it's helpful to get our own eyes on these projects periodically, but there's no substitute for having allies who are there and embedded in those communities day in and day out.
Yeah, wonderful. So keeping with our international theme, do you have any gotchas from your experience in making international grants that you want to make the audience aware of before they were to start an international grant making program?
Actually, I was in a lecture the other day. Somebody was talking about Alexis de Tocqueville and, his observation of these charitable associations that were somewhat unique to America. And I think that's still true today in a lot of respects, where you have, much more government-dominated social sectors in Western Europe or in China. In India, the charitable sector is kind of a wide range, a wide spectrum, more developed in some areas than others. So I think just having that understanding of the local context and the sense that their baseline awareness of charitable grant making itself may be relatively low, let alone what's needed to comply with an equivalency determination. And sometimes too, so just educating the grantees. We've equipped our partners on the ground in these communities with a kind of layman's version of why we're asking for, say, 5 years worth of financial information and to know all about their donors and things like that. And they just thought we were giving them a bus, right? But we want all this other information too. So just that education piece and understanding that our understanding of charitable grant making is not as automatic for them as it is for us. Obviously, the ethical side. So, the Timken company is perennially recognized as one of the world's most ethical companies. We're grateful for that. So our partners understand that, common business business ethics that we're used to in mainstream North America may not be as common in some of these other contexts. If the coin of the realm is essentially, well, in order to get any building built, you have to bribe the local official to give you the permit, making sure that our partners understand our expectation that we will be observing our ethical practices regardless. And that does kind of truncate the target range for potential grantees, but it's certainly a commitment that's worth that constriction. And then the other thing too that we've found, and this might be helpful to others who may not have feet on the street and every community where they might give internationally, is look at partnering with standbys or kind of the main lines here, mainline charitable institutions that may also have a presence globally. If it's the Red Cross, if it's Habitat for Humanity, one of our great projects has been a habitat complex in Romania, which actually is housing in part Ukrainian refugees at this point. So, but the Habitat brand, the Good Housekeeping seal, the understanding that there's a compliance with Habitat's global practices, which are second to none in terms of transparency and ethics, really gives us more confidence. So that's a good way maybe to stick the toe in the water in some of these international locations, is find a mainline institution with a global presence and maybe use that as a vehicle to get the feet wet. And then from there, maybe build some other relationships locally.
Yeah, so kind of like Carla's fiscal sponsor, using that opportunity to partner with organizations who are really good at already doing this, especially if you don't have people on the ground, like you say, is a really good option. For sure. Thank you. Chelsea, how might you advise a small foundation on maintaining internal controls where there may only be one or two people in the accounting function?
Thanks, Pam. Yeah, we see this a lot. And, I think of 5 main internal controls. Number one, having those policies and procedures in place. And you want to make sure that everyone knows from the top down that there are policies and procedures that the foundation has, and that everyone is going to have to follow those policies. Really making sure, like sometimes we'll see the top person making exceptions for himself or herself about these policies. That really does set an unethical tone. So making sure that everyone knows that they, are supposed to follow these policies and procedures is so important. Number 2, defining those, clearly who is responsible for what. Many times I'll hear people say, well, I thought that she was going to check the invoice. So for example, with invoices, you want to make sure that you're defining who is responsible for checking the math, who's responsible for approving the invoices when they're paid, so on and so forth. Physical controls. So when in doubt, lock it up. We want to make sure that checks are in a locked drawer. Any, fixed asset has some, physical control. So security, locks, something that should be protected, with passwords, so on and so forth. Number 4, I would say, would be controlling cash. So if there's cash involved, such as, a fundraiser, always have 2 people count all the cash together. That makes it so that no one can slip up on the math or, pocket a couple of bucks. So always having 2 people there, I think, is really, really crucial. And then lastly, and I think this one is super important, reconciling that bank statement. So, really making sure that you have a reconciled bank statement will help, make sure that embezzlement can't go on for very long. So sometimes it would be ideally someone is going to be reconciling the bank statement that would be other than the bookkeeper. And they would be reconciling the bank account from an unopened statement. And that's like a really strong check on the person who's handling that money. And then I know that some people will say, well, hey, we don't have a bookkeeper. So I think then in those cases, someone else, such as even maybe a board member, should be receiving that unopened bank account before it's ever been given to like the bookkeeper or that sole staff person.
It's really great advice. And I like the fact that in your examples, you're talking about, you may only have one or two people, but really you do have other people with a vested interest in the organization that can step in and help out. So
exactly.
That's great. Claire, how might you advise foundations on developing detailed policies and procedures if they don't have any, or if they don't have any that are considered robust?
Sure. Yeah. I mean, if the big takeaway, if you haven't heard from us enough, is policies and procedures are kind of an essential thing. Both Chelsea and I, we will talk about it all day until you fall asleep or whatnot. But if you are going to try to internally develop or revise, I would say start with planning. So establishing a committee. Generally, it has some board members, executives, and other relevant stakeholders involved in the various processes, and then develop a scope and objectives. You want to outline kind of what each of these policies is supposed to cover, making sure that you are covering all the essential areas, and then prioritization. Writing policies and procedures. It's not like you guys have lots of extra time in the day. These are kind of a big endeavor. And so you want to be hitting the most essential policies first, and then maybe do that in a phased approach. And then from there, you want to research the legal requirements when it comes to the various aspects of your organization. Anything that could affect your policies, especially if you do have those international type operations. And look for best practices, using industry standards, reaching out to similar organizations to see what they have in place just to get some feedback. And then if there are templates or things that you can look at, I always caution folks with templates because I feel like people get into this comfort realm of feeling like, oh, we're just going to use this template. We'll just Control F and change the name and boom, we got a policy. But if that policy doesn't actually align with what you're doing, it's honestly more of a detriment to your organization than it is a help. So I generally caution against that. And then when you're going into drafting, make sure you're using like plain language. Don't make it so that, the reader can't understand what is happening or what is necessary. Make sure you have consistency in the terminology and the format across the various policies. Make sure you're legal. If you have a legal team, that they're performing a legal review, just making sure that you're compliant with any of those existing laws and regulations. And then make these living documents. Obviously, you're going to need to get approval and implementation. We've talked about this a little bit about training, that ultimately some of the best and well-run organizations I've seen have a policy that they're reviewing, either biannually or annually, whatever, but they are updating it and they are working on it day to day. They're referencing it and referring to it, and it makes sure that they're really adhering and that everyone within the organization understands what's expected of them in their roles. And so that gets back to the training piece.
Thank you very much. So I know we don't have a lot of time left, but I'm going to see if Mike will, in 60 seconds or so, hopefully we've told you lots of ways to avoid a taxable expenditure. But Mike, if a foundation finds that they've had one, what do they do? Can you give us a 60-second response to that?
Sure. How about in 7 words?
Perfect.
Let's do. So fix it as soon as you can. maybe that's too simple. But once you find that there's been an error, maybe a taxable expenditure occurred, don't automatically react. Catch your breath. Make sure you're understanding all of the facts. You understand the full exposure. But then once you do, set about to fix it. And the Treasury regulations and code have defined terms for correction, what it means to correct something like this. You can try and claw back funding if that is an option. And if it's your first time making this type of taxable expenditure, often there are ways to argue for abatement of any penalties that might apply.
Wonderful. That would be the goal, right? Restore the organization to be whole again and hopefully get those penalties abated. Wonderful. Well, I want to thank everybody on our panel for the discussion today. Hopefully we gave you some really great ideas on how to avoid taxable expenditures. So I'm going to turn it back to Amy.
All right. Well, thank you all for a great discussion. That was a lot of valuable information packed into that session, so we really appreciate that. And to our audience, we are going to take a 5-minute break and then regroup for our next session, which is how and when to outsource grant compliance, accounting, and human capital. Please keep your webcast console open and join us back here in 5 minutes. Thank you. All right, everyone.
All right, everyone. We're going to get started again. I hope everyone enjoyed that short, quick break and is feeling a bit refreshed. In the interest of time, we're going to move right into our next session, how and when to outsource grant compliance, accounting, and human capital. And now I will turn it over to Amy Ahyo, Moss Adams Director in our consulting group.
Thank you, Wendy. We're going to talk today about outsourcing and mostly around grant compliance, accounting, and human capital. We have 4 presenters today. My name is Amy Ahyo. I'm a director here at Moss Adams. I lead our large client outsourcing group, and I also work with accounting departments to make them more efficient and work better for their organization. Brett, you want to introduce yourself?
Yeah, thanks, Amy. My name is Brett Addis. I'm a director at Moss Adams, and I lead our human capital advisory practice.
Ariel?
Apologies if my dog is barking in the background right now, but good morning. My name is Ariel Lybarger. I am a senior manager here at Moss Adams, and I primarily work in grant compliance and consulting, as well as policy procedure consulting. And then Jennifer.
Yeah, thanks, Ariel. And I'm Jen Teicheira, senior consultant in OFA, which is our outsourced finance and accounting practice. And I also lead the not-for-profit practice for our OFA group. So taking a look at the agenda today, in the first part of our presentation, we're going to start out with sort of reviewing some general information around outsourcing. We'll go over some positives and good reasons for why an organization may consider outsourcing some of their functions. We'll also touch on some misconceptions or maybe some drawbacks around outsourcing, and then also discuss sort of how to outsource and recommended best practices in terms of approach. The last half of our presentation, we'll kind of get more into the details and go over the various services listed here. So finance and accounting, grant compliance and consulting, customized outsourcing, and then human capital management, and what those may look like in an outsourcing type of situation. And I believe that brings us to our first polling question. So I'll hand it back over to Amy.
All right, thank you. So the first polling question of this session is, what is your experience with outsourced support services? And then your options are A, none, B, some, C, a lot, or D, we mostly outsource. We will give you a few moments to respond. As a reminder, please click the button next to the answer you choose and make sure to hit that submit button so that it tracks your response. And then if you would like to receive CPE credit for this particular session, you will need to respond to at least 5. Oh, sorry. No. Let's see. How many does this one have? 3. 2 of the 3 polling questions. We'll leave it up a few more seconds here. All right, here are the results.
That's great. We have a really good mix of people. It looks like most of you have some sort of outsourced services, and just actually quite a few with a lot as well. So this will be a really good session for everybody. Okay, in the outsourcing overview, we're going to talk about the reasons for outsourcing, some of the drawbacks, so you can plan for those, and how outsourcing can be a great partnership for you. There are a lot of good reasons to outsource, one of which is the stage that your foundation is in. We usually see foundations in two different stages of their life cycle, either when they are first starting or when they are growing. When a foundation is starting brand new, you may not have the funds to support a full-time staff, and finding good part-time people can be difficult. You also may not have enough grants to warrant a full-time person, but know that there are enough grants that the accounting is starting to get more complicated. Most importantly, outsourcing the accounting allows you to focus on growing your foundation and not on the technical requirements of accounting and grant compliance. I think this is one of the most important reasons that you would outsource, so that you can focus on getting as much grant money out as possible. We get a lot of calls from executive directors of new foundations who are asking what accounting platform they should use and how should they monitor the grants for compliance. We answer those questions, but we also suggest outsourcing, because then that is one big item checked off before you open. Some foundations choose to outsource for the short term and plan to bring it back in-house after a couple years when they're ready. But a lot of foundations are happy to have that taken care of and never leave. When a foundation's in growth mode, we hear from potential clients that have outgrown their current staff that you have and that they don't want to add more headcount or aren't even sure what positions they are missing. Other times foundations get an influx of money and know they can't add staff fast enough to meet the program needs. We saw that a lot with COVID funds and the scramble to spend that money fast. Suddenly, foundations were doubling in size and their accounting and compliance teams couldn't keep up. Outsourcing can supplement your in-house team. Some of the other good reasons to outsource is the power of a team. There's value in knowing that you don't have to worry about vacation time and maternity leaves coming up. Your outsource provider handles the ebbs and flows of staffing and is available to you. There's also power in knowing that the outsourcer has more professionals available should something come up that you're not ready to handle, such as a change in tax law or a question about allowable expenses. When you're outsourced, you typically interact with just one or two people, maybe a tax person and your account manager. That person becomes your go-to person, and you really only have to remember one name in the firm. Behind that person is an entire team of people that are doing the work, but that is not the part that you see. You just have your one account manager. Industry best practice awareness is another really good reason to outsource. Your outsourcing firm is made up of people that have worked in the industry. They've seen a lot of different ways that foundation accounting can be processed, and will suggest what will work best for you. They've also tied into all the changes that can be hard to keep track of and will keep you in compliance. Technology is such a big thing these days, and keeping up to date with the latest accounts payable platforms, accounting software, and analysis tools can be daunting. All of this technology can help you keep more efficient and accurate books, but knowing what to use is challenging. Implementing a new technology platform takes a lot of resources in time and money, and can make it hard to focus on your foundation's mission. Outsource providers maintain relationships with the various platforms and are constantly being shown the latest advancements. That's going to benefit you.
All right, so Amy just discussed some of the reasons why outsourcing can be a great option. Oh, I think we're back one slide, sorry about that. But there are also some potential drawbacks, if you will, depending on an organization's situation, which we'd like to touch on as well. So I do want to emphasize here the word standardized at the top, as that's more so the perspective I'm coming from when going through these points. Amy will talk here a bit and again from more of a customized view, but for the sake of this slide, we're really focused on sort of that systematic, sort of uniform approach. I would say one that can still be somewhat tailored to a client's needs and situation to a certain extent, but because of the standardized nature or that more prescribed approach, it usually can be applied sort of across various organizations, no matter the industry, type of client, et cetera. So in our experience, organizations who range from sort of that small to maybe more mid-sized typically fit this more standardized approach pretty well. We've also found that clients who are in stages of rapid growth and sort of getting larger, who need that assistance to kind of help with those evolving systems, those processes and procedures to support that growth, have also had good success in this model. Maybe they don't have, any finance or accounting personnel at all, or they have minimal personnel in certain areas and so are really looking for those additional resources to fill those gaps. So all that being said, in terms of drawbacks to consider to that first bullet point here, outsourcing is not always better and less expensive versus, internal hires. While it can be cost effective in some situations, that isn't always the case. So, it really depends on sort of the roles and the tasks that need to be filled. For example, a full-time position is probably more challenging and expensive to fully outsource just because, of the time and effort that is required, amongst other reasons in that position. As Amy mentioned a little bit in the last slide, outsourcing in our experience kind of tends to work best, when there are various tasks and responsibilities that don't really relate to one full-time employee, but instead lends itself more to sort of those various part-time roles. Additionally, with cost, considering the value add is also important, I would say. So outsourcing could potentially sometimes be the pricier option, but a lot of the times it is a better value, right? So again, Amy talked in the prior slide about the power of a team, really having that deep bench and sort of those additional resources and expertise versus, quote unquote, putting all of your eggs in one basket, if you will, with just hiring specific individuals. So there's obviously some peace of mind and comfort, in that you aren't relying solely on one person to get the job done. If someone were to go out sick or on vacation, more often than not, there is a backup, to keep things moving when it comes to using an outsourced provider. And then lastly, in terms of cost, a hybrid approach is also something to keep in mind. So there could be a situation where an organization does employ an internal person, but they may also still need that outsourced provider to sort of complement or add support for that individual. For example, maybe there's a CFO or a director type who's doing more of the oversight, maybe the FP&A, strategy, et cetera. But the organization doesn't have that sort of accounting or finance department underneath that person to help with the day-to-day accounting functions. On the opposite side of that, maybe there is an internal team member, who's handling more of the day-to-day. So they have someone like an AP processor or someone helping with AR, but are looking for a bit of that higher level resource, maybe at that controller level to help with closing the books and financial reporting, things of that nature. So, just various situations where outsourcing can come into play that could potentially be pricier than maybe expected, but nonetheless, still a good value. Those are just a couple that we've commonly come across. And then again, it really does depend on the organization, its situation, and its needs. Another drawback is that, the outsourced provider isn't dedicated solely to the organization, right? So because they are outsourced, they're likely serving multiple clients. So they're not as readily available as an internal hire would be. Additionally, in sort of that more, I would say, standardized outsourcing approach, the provider can't always follow the same processes and procedures and or utilize the same systems that may be in place currently at an organization. This is, I think, really important to keep in mind. Sometimes this could be the root of a problem if the outsourcing situation isn't going well, which we've seen before. before. So more often than not in this sort of standardized approach, there is already a preferred tech stack, if you will, so that accounting system and maybe related accounting tools that the provider is very familiar with and experienced with. And then on top of that, the provider has already built some best practices and processes around those systems and tools that really allows them to sort of work most effectively and efficiently with the client in that outsourced situation. And sometimes, unfortunately, it doesn't always jive with what the current organization is used to and or is open to using. And then outsourced providers also can't take the place of people on the ground, right? That may have stronger connections and better access to management. So There is obviously something to be said for having those readily available staff that you can lean on whenever you need them. Kind of like what I mentioned a bit ago with the provider not being dedicated solely to the organization. You know, in this situation, the provider is obviously a third party. So there maybe isn't as much face time and or access that there typically would be if it was someone in-house who was in that role. And then lastly, you know, management responsibility cannot really be delegated well. So again, not having that consistent sort of on the ground internal presence can make it very challenging for the outsource provider to sort of manage and oversee people internal to the organization. You know, in our experience, no matter how good of intentions or efforts made on both sides, those situations aren't always the most ideal and can lead to maybe a more inefficient engagement because there's usually some sort of disconnect. So, you know, while the outsource provider is a part of the team, you know, they are an extension of it, but they aren't internal. And so likely not in a position to really sort of make, drive, or own those management type decisions and responsibilities.
Customized outsourcing is a little bit different than traditional outsourcing. We're going to discuss those differences in detail coming up. But for now, I will say that customized outsourcing is more tailored to you. It involves a larger team of people, and it integrates more seamlessly into your own foundation. We also refer to customized outsourcing as large client outsourcing because it typically is tailored individually to each large client's needs. All outsourcing has drawbacks, which doesn't mean it doesn't work, but it's important that you're aware of them so that your expectations are met. The first drawback of customized outsourcing, just like traditional, is it's not always better or less expensive. As Jen said, your outsourced team has a different culture in their firm, and it takes some work to integrate two different work cultures. However, in customized outsourcing, you have a bigger group of people working with your foundation, and they are more likely to focus on your culture to make sure the program staff don't see a difference between their own foundation and the outsource provider. Outsourcing can be expensive, but remember that there are a lot of hidden costs to having more employees, including recruiting, management, benefits, and employee relations. In the end, it's sometimes possible that outsourcing is no more expensive than building up your staff. Just like in traditional outsourcing, management responsibility cannot be delegated. There will still be an executive team at your foundation making decisions around growth and cash flow. The executive team still takes responsibility for the financial statements. In customized outsourcing, there is typically an accounting staff and managers that approve the work that outsourcing provides as we supplement their team. It's important, since management is still responsible for the financial statements, that they are regularly reviewed and any questions that come up can be answered. That's also true for compliance. Management should sample and review the work that the outsourced team provides until they are comfortable, and then continue to review. It comes up sometimes in outsourcing when we're contacting program managers with questions or waiting for program coordinators to submit an expense report that we just aren't getting anywhere, no matter how many times we've asked. That's because provider cannot always take the place of people on the ground who have stronger ties and better access to management. In that case, we have to reach out to somebody in the foundation with a little more name power than we have. And then suddenly things get turned in. This isn't unique to outsourcing though. We've all been in that position of not being able to get a response and asking for the next person up to send a message. Nobody wants to hear from the CFO to get a missing receipt into accounting. The comment that we are not 100% dedicated to the foundation is complicated in customized outsourcing, because in a lot of ways we are. The team assigned to the foundation is bigger, and many of them will be 100% on only that engagement because of the large volume of work that's required. However, the leadership of the team is usually split between various foundations or on different projects. For instance, I lead the customized outsourcing group, and I'm here with you today. Even if the entire team isn't 100% dedicated to you, there is always work being done for you. The big difference in drawbacks between traditional and customized outsourcing is in the use of procedures and systems. In customized outsourcing, you have a say in those procedures. You often share the procedures with us and ask us to follow them. We may suggest a few changes, but for the most part, that's how we're going to process for you. If there are reports that need to go out every Tuesday and deadlines every Friday, then that is what we will do. Following your procedures helps to keep the flow seamless. We also work on your accounting system. This involves getting access to your system and in some cases getting laptops issued to us that are loaded with all of your software. Customized outsourcing means we aren't going to work on the system of our choice. We work on the system that your team is using. This can take a lot of upfront work from your team, as our team has to be trained and begins learning how things should be done. But that results in an outsourcing team that feels like one with employees and us, as opposed to employees or us. Lastly, outsourcing should be a partnership. It takes a lot of work to outsource from you and from your provider. First, you've had to choose your outsource provider, determine what you want to outsource, work with them to get them what they need to complete the work, and then review what they're doing. On our side, we have to identify the team, participate in training, organize around your needs, and perform the work. There's a lot invested on both sides, and neither of us wants to see this relationship end before it should. That's why the best outsourcing relationship is one that is beneficial to both sides. Your provider should not only be your bookkeeper, they should be your partner. Both parties should be focused on trust and communication. There should be regularly scheduled meetings where the client brings up upcoming changes, introduces new team members, talks about policy adjustments, company plans, and on the other side, the client gets a robust review of their financial statements and lets us introduce new team members. Trust is built up through both parties supporting one another, not blaming, and each responding in a timely fashion. Open feedback is important too. We want to know if we aren't meeting your needs early in the relationship so that we can adjust. And if we are experiencing roadblocks to completing your work on time, then we want to bring that up to you. There should be clear measures of success. That might be always hitting your month-end deadline, responding to emails within 24 hours, or processing grant expense reports within a certain number of days of receipt. These are defined measurements that let both of us know that we are on track and meeting your needs. It's important that the pricing is mutually beneficial, and sometimes this one gets tricky. If you're paying more than you want to and not getting the value that you expect, then over time, you're going to look for a cheaper alternative. But at the same time, if your firm prices themselves too low, then they're going to struggle to keep enough staff on your engagement and will either be constantly asking for contract negotiations, which is a distraction on your side, or there will not be enough staff so you don't feel like you're getting the right level of service, or even worse, you might get dropped as a client. And finally, since your provider is a partner and wants you to succeed, they should be providing valuable insights. As an outsource provider, we get excited to see client growth. We want you to succeed. And because we are in your book so much, we can see trends in expenses and revenues that we can point out. We have a wealth of analysis tools that we can use to create reports. We want to meet and we want to discuss your business.
Thanks, Amy. So I'm going to spend a few minutes talking about how to outsource and a few recommended practices You heard a lot from Amy and Jen a little bit ago, and I want to outline a couple other things that they said, but were kind of, I think, maybe buried a little bit in some of their message. And as we look at some of these outsourced providers, there's a couple different things that we need to look at. And one is, are you looking much more for a strategic outsource provider or a tactical outsource provider? Right? And I think regardless, both of them should be providing you some sort of direction and guidance based on the scenarios. I think one of the things that you did hear from Amy and Jen is that there's a lot of different variations of outsourcing out there. And whether this is HR, whether this is finance, whether this is accounting, there are some very traditional outsourcing practices that we really recommend with our clients. In fact, last week, I was at a foundations conference, and the whole conversation, for me, was more around HR, but the whole conversation of outsourcing really came up. And some of the questions were, how do we even think about this? How do we get started? What are the things that we need to start looking at? And one of the questions that I would typically start with is, what is your outsourcing strategy? We talked about having scenarios where maybe you're under-resourced, maybe you're going through a growth phase, maybe you are looking at budgetary constraints, right? There's a number of variables that can drive an organization and a foundation to outsourcing, but what is the strategic direction you're trying and problems that you're trying to solve? And I think once we define those problems, that really helps us pinpoint on a couple things. And I want to touch on really the people, process, technology first, and then kind of unpack a couple of the other areas. So from a people perspective, once we understand the strategy, whether it is, accounts payable, receivable, finance, HR, it really helps us hone in to understand what are those key process areas that we need to outsource as a foundation. And sometimes it's all of them, right? But what this allows us to do is be very focused and deliberate in terms of the why we need to outsource and what are we outsourcing specifically. And that's really important because as we look at those overall processes, the next question is, well, what are the kind of the people capabilities that we need? The other question is, what are the people capabilities that we have? And as I get down into some of the roles and responsibilities, you'll see why that's really important. But as we think about those processes today and we're looking to outsource, let's just say, some of the accounting responsibilities, do we have those roles internally today? And we just don't have enough of them. But the bigger question is, what are we going to do with those roles if we opt to outsource? And in many instances, right, those roles would shift to become part of the overall governance, part of the control board, part of the contact point or liaison, if you will, between the outsourcing partner and the overall foundation. But I think really understanding, looking at those processes and then understanding what your internal capabilities are and what are the gaps that you're trying to solve allows you then, as you start evaluating certain outsource providers, to really understand their people capabilities. Because it's one thing just to say, hey, I want to outsource my recruiting as an example, or I want to outsource my accounting. But what does that mean? What are those people skills and capabilities that are going to be required? Amy mentioned this a little bit earlier, and I just want to reinforce this, is that a major part of successful outsourcing is having cultural alignment. And so when we use things like recruiting and we use things like accounting and the way that they're going to be interacting with the organization, we want to make sure that we're not losing that synergy by outsourcing certain processes, and by making sure that we have those same skills and capabilities, or bring in those skills and capabilities that provide the right level of experience to whether that's our internal clients and customers, meaning ourselves, our own employees, or externally. So the people aspect of this is really, really critical. And when you think about the process is really the what are we outsourcing, the people component is really the skills and capabilities and the number of resources, things like that, we need to actually execute those processes. The third area that I often get questioned on a lot is around the technology. And so the question is today is, do you have technology that you're using? And do you expect that outsource provider to use the same? Right? In some instances, there's a lot of synergy in there. And if you're using some homegrown systems or some, let's say, lower market industry type technologies that maybe you have just a low investment, they may not be as prevalent in the market, and therefore it might be harder for that outsourced provider to either get trained on those things or use them today. So the technology is a really big piece of this. The other key piece of this is around technology is about also understanding not just can they use it, but are they using it in the way that you need them to use it? Are they putting in the right level of controls in place from a technology? Are you expecting them to do certain compliance reporting and all of those things that you may need from a reporting perspective? Does their technology meet those needs? And do they understand what you're actually asking them to do? And do they have the capabilities of pulling that information out of the system? So really, when we start thinking about the whole outsource model, right, that people process technology is extremely critical, right? So if you think about it again, process is what we're actually outsourcing. People capabilities are what we need to do the work. And the technology is really enabling that work to be done in a way that you're going to help drive and meet all of your compliance needs or your reporting needs or transactional needs in general, right? And so again, going back to the people piece, you need to make sure that from a technology, they have that right skills and capabilities. Now, of course, the last box up here is, work on with your provider best practices, et cetera. And I would say that, define and select this provider. Not all providers are going to be able to meet what you're looking for 100%, but there are workarounds and there are things that they can do to enable what this process is. So if it is systematic, for example, and you have time, they can go in and they can get people trained on the system to evaluate it. The question is when it gets into licensing and buying new systems and things like that, it gets a little bit complicated. The other big piece I wanted to touch on, I would say this is probably across the board one of the most challenging areas that our clients face, is really around the control of this. So Amy mentioned timelines and goals and measures and meeting expectations, right? This all comes back to SLAs and roles and responsibilities, as well as driving business outcomes. And I think as you really start looking, I think one of the first things that you need to make sure that you put in place is a very structured governance model where you yourself are making the decisions. As I mentioned earlier, outsourcing could be a bit strategic. It could be a bit transactional. And it's okay for them to bring ideas and thoughts and ways to potentially do things better, optimize things, et cetera. But ultimately, you have to own the decision. Because a lot of times what that decision isn't just for that specific process. It could be for a number of things or a number of different processes. So ownership of the decision-making is extremely critical. The second point, as I mentioned earlier, about having a point of contact is make sure that you have a subject matter expert who understands that process internally, who understands what you're trying to drive from an outcomes perspective, and what are the service level agreement that you have between yourself and that outsourced provider. This individual will be very critical, and not only being able to answer questions, but manage, monitor, and track the performance of that outsourced provider. And I think the last piece of this is really around the controls and segregation of duty. In some instances, you might find that you are doing a bit of a hybrid model outsourcing where some of the work is being done in the foundation and some of the work is being done in an outsourcing model. Having a clear set of roles, responsibilities, you can often call this an ARCHI model, the accountable, responsible, consulting, informed model, is going to be really critical to ensure that not only you're segregating duties, but the expectations of those duties are crystal clear, so you don't have any inefficiencies, redundancies, and things like that. So with that said, I think we're going to start diving in a little bit to some of the services overview. So Jen, I'm going to hand it back over to you.
Thanks, Brett. So like Brett said, we're going to kind of jump into more of the details here and talk about outsourcing across the various functions, and we'll start with finance and accounting. Okay, so the table here sort of outlines, I would say, tasks and responsibilities on the accounting side that are common in an outsourcing situation. The bulk of this, shown in the first two columns, is really more around that day-to-day accounting, right? Keeping the books updated. So transaction processing, think accounts payable, accounts receivable, processing payroll, anything around, maybe employee expense reimbursements and credit card expenses. And then performing the related accounting around those transactions, or in other words, basically recording that activity into the general ledger. So whether that be, outgoing vendor expenses, payroll entries, if there's any donor revenue or incoming funding, investment income, and then additional dimension coding such as, class, departments, projects, etc. And then taking all of that information and doing a consistent close of the books, ideally on a monthly basis, is what we've seen works well. Maybe quarterly, depending on the organization's size and its needs. But this would be doing sort of the various reconciliations around your bank accounts, your investment accounts, any credit cards you might have, closing entries around prepaids and accruals, fixed assets and depreciation, maybe some revenue recognition, tracking and accounting for net assets, so that with or without donor restrictions, just to name a few. And then in addition to sort of performing all of that accounting, generating that financial reporting from the accounting is also a pretty common task. So we've kind of listed here the basic reports that a foundation would typically utilize: that statement of financial position, the statement of activity, maybe a cash flow. If you're doing any dimension tracking, so that statement of activity by class or department, and then a budget versus actual. There are others that I'm sure could be added to the list, especially as an organization kind of expands on its dimension trackings, or if it has any customized reporting needs, etc. And then there are also service offerings out there around accounting systems and tools selection and implementation. So Brett touched on this a little bit ago as well, but really assessing, the client's systems, what they're currently on, and maybe providing recommendations, and are then helping them sort of implement those tools. So even if someone's starting from scratch, going through that same evaluation process to really understand the needs of the organization, its plans, and then recommending, again, and or implementing platforms that fit their situation well. That would be around anything like a general ledger / ERP accounting system, various tools out there, right, that kind of layer on top of that can really help streamline that accounting function. So things around, again, accounts payable, accounts receivable, maybe expense management around employee expenses and our credit card expenses. And then last but not least is that advisory piece. So then taking all of that information and turning it into business insights, those KPIs to really help the client and their team make informed decisions and run a better organization. Okay, so to kind of tie a bow on all of that and wrap it together, put it in perspective, I have a real life sort of example or case study here that I wanted to share. So we had a foundation come to us, maybe it was a few years ago, who was in need of accounting assistance and more. They had been around for a couple years, and while I would say still somewhat in that kind of startup and development phase, it was apparent that they were growing quickly and had a very dynamic nature. So at the time, they actually did already have another outsourced provider, but felt that that provider in particular wasn't really able to scale with them and didn't have the not-for-profit or foundation knowledge and resources that they were looking for. They also had a new director of operations at the time who had only been in that role for just a handful of months. And she oversaw their accounting function, which had no internal accounting personnel. So in general, they had quite a few gaps in their accounting system, their tools, and their processes. They were looking for more sophisticated reporting. So we're really looking at doing somewhat of an overhaul to get them to a place that could really keep up with their pace of change and their growth. So when we engage with them, in terms of our value add, our, collaborative team approach, where we are working in partnership with the client to really address their needs and find solutions, along with kind of keeping things efficient by utilizing cloud-based technology and combining all of that, with our expertise and industry specialization, we really were able to kind of help the client elevate and improve their situation. We were able to streamline their accounting function and really fill those gaps, kind of provide that lift so they could focus, again, less on the accounting and more on things that really matter to them, like driving their mission forward. And since then to date, we've really been able to provide them with more consistent, accurate and transparent reporting than they were receiving before, and those insights ultimately contributed to helping them run their organization more effectively. So again, kind of just overall a good example of how outsourcing on the accounting side can provide some great benefits and really help out organizations. And with that, I think we are into our second polling question. So Amy, I'll hand it back over to you.
Thank you, Jennifer. So the second polling question for this session is, could your organization benefit from outsourced finance and accounting support? And your options are A, yes, B, no, or C, maybe, I'm not sure. And then I also do want to make a correction on the number of polls you need to respond to for CPE credit on this presentation. You will need to respond to at least 5 of the 6 polls, since this session is worth 1.5 credits. Also, make sure you're hitting that submit button after you select your response so that it records your CPE credit. All right, here are the results.
Great, looks like we have somewhat of a pretty even split, some that aren't sure, which is okay too. All right, and I think Ariel's up next to talk about grant compliance.
All right, thanks, Jen, for your great information on outsourced finance and accounting. First, I want to apologize if my voice is going in and out, or if I'm coughing on the side. I'm getting over a cold, which has not been the most fun, so my voice sounds a little funky and doesn't want to play nice with me today. Sorry, technical difficulty there, getting switched over. All right, so we're going to spend some time talking about grant compliance and consulting and how that can mean a variety of things depending on an organization's size, specific needs. And then in a couple of slides like Jen, I'm going to go over some high-level case study information. The first 5 boxes, so the 3 on this slide and 2 more on the next, are really focused on the high-level strategy controls side of an organization, and then one really on the tactfully implementation of grant compliance and outsourcing that function. So I'm going to spend a little bit of time kind of explaining each of these areas just to give you an idea of what this can look like. Starting with an org assessment, often we see, and we start with this process of an organizational assessment before we dive into planning for the use of funds or the actual funding that you're receiving. An organizational assessment is where we look at how your organization is currently structured, what your staffing currently looks like, and what your strategic priorities are. And then we help guide you through the process of understanding how your organization may need to restructure, grow, or even downsize based on your 1-year, 5-year, and 10-year strategic plan, priorities, and mission. So thinking of strategic planning, this could mean planning for your organization as a whole, that future planning of where and how you plan to grow or want to grow, or it can mean strategic planning for a specific funding source. And this is where I'm going to dive in, because this is where I spend most of my time in strategic planning for this purpose. We've seen this a lot with the influx of American Rescue Plan Act, so ARPA funding, and we did this a lot with CARES and COVID relief funds. Here you're looking to an outsourced provider to help you with that strategic planning for the use of funds. So identifying how the funding can be spent based off of the funding source, whether that's private or government or other forms of funding coming in the door, and then understanding how that funding fits and aligns with your specific mission and goals and the funding that you received. During this work, During this, we'll do a couple of work sessions where we'll work through how the funds can be compliantly used, where the biggest impact might be for your community, potentially administering a community survey where we go out and we ask the community what's important to you, how would these funds be of most impact to you, and bringing that back into a work session and saying, okay, now what do we want to do with this? And this may include helping you to revamp or develop from scratch a strategic plan that ensures your organization's mission and values are at the core of the funding that you're seeking or funding that you've received if we're diving into a specific funding source. So then once you've got kind of your org set in place, a strategic plan in mind, then you go back to that execution of how are we going to do this? How are we going to monitor funds? Do we have the right accounting system? Do we have the right people and processes in place? And so often that comes out during a policy and procedure project. Often organizations have policies in place, but they may be anywhere from 1 to 15, 20, or even 30 years old. They may be electronic, or you might be dusting off some hard copies that you're finding in a file cabinet. A lot of organizations don't tend to look at their policies and procedures often, although they're very important. To start this process, we do what is called a gap analysis, and this is where you look at the policies and procedures you may have documented, again, regardless of age or state of update, that would affect your ability to compliantly manage, administer, monitor, and be a good steward of the funding that you're receiving. These often include grant management policies and procedures, procurement, financial management and reporting, accounts payable, timekeeping and payroll, conflict of interest, and a whole bunch of others, depending on the funding source or your organization structure. As part of this process, we'll review what you currently have documented against your current funding requirements, other best practices, for an organization similar to yours and based off of experience, and then provide you back with a memo that details in an outline form what we identified as potentially a full gap, meaning you don't have anything documented around that process, excuse me, a partial gap or an update may be necessary, you have something documented, but it might be out of date or it might be missing a few requirements here and there. And then you can take that and you can either go through the process internally of drafting or updating those policies and procedures, or we can continue on with the update or development. Often that gap analysis will lead to a full policy and procedure update or development project where your outsourced team will take on the heavy lift of actually getting your organization's policies and procedures up to date and in alignment with current systems, processes, and best practices. Organizations often get stuck on this part of the process internally because that actual update development process is a pretty heavy lift and it's time consuming over a number of months. And you're asking your staff who are probably already super busy and doing multiple jobs and wearing multiple hats to then add something else to that to-do list. And that's where your partner, like in this process, would come into place or in play. In this process, we would request just a little bit of time, usually about an hour on the front end, of key individuals in each area that you're going to dive into. And you just do a process walkthrough. Tell me what you're currently doing. Tell me what systems you're using. Tell me if it's working well or it's not working at all. And we come at it from a perspective of, I don't really know anything. Tell me everything I could possibly need to know about your processes, your organization, and your staffing. And then based on those interviews, we would then go back and update or fully draft from scratch a policy and procedure over several weeks and provide a comprehensive draft back to the organization for review, and then do a couple rounds of feedback update in a very collaborative manner. We want to make sure that whatever's drafted is actually implementable for the organization, and then get that ready to finalize. Tying all of that work up with a bow then comes down to flow charts if you need some kind of visual representation of the policies and procedures that are now narrative for your organization. Some people are visual, some people like to read about them. We find that both come in handy, or developing templates like sole source justification forms, subrecipient versus subcontractor determination flows or forms, that kind of stuff, just to help make sure that you've got the tools that you need to actually implement those policies and procedures. Additionally, this could look like developing training materials and then facilitating or co-facilitating training on the new policies and procedures or the updated processes that are going to be implemented. And the purpose of kind of stepping in and doing this training and these facilitation, whether it's by your outsourced person or internally, is just to make sure that your staff who are going to be implementing these policies on a daily basis have a really good understanding of what's being asked of them, what those expectations are, and then an opportunity to ask questions. Next, we're going to talk about a current state assessment. So if your organization has already received funding and isn't certain that you've been tracking and monitoring it in compliance with whatever that funding agreement looks like, or even with your internal policies and practices, then we can come in, or an outsourced provider can come in and provide what's called a current state assessment. In a current state assessment, you would discuss the funding received or your current processes and practices in place, and review any relevant documentation, such as a prime funding agreement or notice of award that's maybe been received, current general ledger or other tracking mechanism the organization uses, whether that's a true accounting system, a QuickBooks Online, or an Excel function, and any other documentation that may be helpful in understanding what has been expensed to date, recorded, and reported as of whatever date the person's coming in to look at things. Based on this information gathered, you would perform a high-level assessment of expenditures that have been incurred and reported, which may include performing a reconciliation of all funding that's been recorded to date against allowable uses, against current practices, whether that's standard accounting practices or your internal processes, or it could be really specific to a specific grant program. And the intent with this process is to help your organization feel confident that you've used the funds as they were intended, and that you're accurately reporting the funds in your accounting system and appropriately reporting the use of those funds back to your internal leadership, whether that's the board or your CFO, or out to a funder if needed. So staying in line with that thought of what do we currently do, how are we currently set up, and are we doing things the way that we thought we were doing them, or should we be doing things differently? Typically paired with a policy and procedure update and this current state assessment is a grant management process development, which includes understanding, again, those current processes and systems, the types of funding that is received or that you plan to seek in the future, and developing a comprehensive but practical, keyword here is practical, because if you can't implement it, then what good is it for you, right? But a practical process for your organization related to grants management and administration. This would also include everything from how your organization seeks those funds through the monitoring and reporting on the use of funds, often developing a compliance monitoring program for your organization to implement. A compliance monitoring program would include the monitoring of your organization's internal use of funds, as well as any subcontractor or subrecipient or grantee monitoring that may need to be performed with whatever requirements you're following at that point. This would also include developing tools such as a pre-award risk assessment if you needed one. Again, that subcontractor versus subrecipient determination, a desk review or audit process for subrecipients or grantees or subcontractors if needed, financial reporting or invoicing processes, templates, budget templates, and a lot more that can flow into that based off of your organization structure, what you do with funds, and how you administer grant programs. Then getting to the task-based portion of this process, which is really more where the outsourcing comes into play and where I spend a lot of my time, is that ongoing grants management process. Often organizations are fantastic at getting funding, being a good steward of those funds, and making a significant impact on the community. However, the part that tends to get forgotten is the compliance aspects of administering a grant program, or that can be the most daunting, especially when you're receiving funds that you've never dealt with before. I know recently a lot of community organizations have started branching into seeking and wanting to receive some of those government funds now that there's a ton of that out there. And government funds just come with stricter requirements and heightened consequences for noncompliance. In this fully or partially outsourced function, what gets helped with here is the accounting and tracking of those grant funds, either organization-wide or specific to a grant program itself. Often we partner with Jen and team on the outsourced finance and accounting piece for this. And then providing expenditure monitoring through performing regular reconciliations and review of expenditures against allowable uses, provide ongoing subrecipient subcontractor monitoring through the review of monthly, quarterly, or annual, whatever cadence you've decided, financial reporting or invoicing, and then executing those desk reviews and audits. This also includes providing routine advisory services to an organization where you bring that breadth and depth of knowledge from bringing in an outsourced function that spends all of their time learning these things, all of their time and best practices, and working with various types of funding to provide you some valuable insight and try and get ahead of questions for you. So then talking through a case study. So a few years back, we had a client come to us and say, look, we're a community foundation. We're setting up another entity to stand partner with our community foundation and do pass-through work. We want to start seeking government funding. And some of that we want to manage and administer in-house, and some of it we want to pass through to other organizations to execute the programs for us. But we really don't know how to do that. We really don't know where to start, and we for sure don't know what compliance means because we've never dealt with federal government, city, state, local funds. We've only ever dealt with donor advised funds or private donations where there's just less restrictions, right? So the issues that they brought us in to solve here was that they didn't know really where to get started. They weren't really sure how they should account for and track the expenditures, the revenue coming in, how many personnel they needed to do this. They had no monitoring programs in place, no policies and procedures developed or in place. And they really didn't know how to get themselves prepared and postured to size up or down as needed as funding increased and decreased over the years. So where we came in is we brought that, like Jen mentioned, that really important collaborative team approach. You do monthly or weekly or biweekly status calls. You are embedded within that program team that's actually executing things from the client's perspective or the organization's perspective. You're really there to help be successful as a broader team. You bring in a highly efficient approach where we've got standardized tools and templates. You provide technical assistance, not only to your organization to say, okay, this is new for you, or maybe you're revamping how you want to look at this or how you want to execute on this. Let us help you learn about it. Let us go do the heavy lift of the research and come back and train you. And then the same thing with any, if you're a pass-through entity or you're looking at granting funds out for any purpose to a beneficiary or a subrecipient, providing that technical assistance and that ongoing training to wherever the funds are going, just so that, do the people that you're providing the funds to in the community, do they know how they're supposed to use the funds? Do they have a process in place to track them? Just so you keep maintaining that good stewardship of the funds. So what came out of that? You have a cohesive team where you've taken your outsourced consultant and your organization, and now you operate kind of as one. We're not in, your outsourced consultant isn't in the day-to-day. We're not one of your personnel, but we are around to answer questions. We are there to help take the burden off of the pieces and portions of a process that maybe you don't understand. Do that compliance monitoring so that you continue to get funding. And then provide that insight into, this is what we're seeing out in the community. Here's where we're seeing funding trends go. Here's where we think you might be able to make a bigger impact. Let's talk through that. So it's the day-to-day outsourcing functions of compliance and accounting and monitoring of grants, but it's also that this is where I see the world going. Have you thought about this? So with that, I think we're on our next polling question.
Yes, so the third polling question for this session is, my organization has processes and systems in place to ensure compliance with our funding sources. And your options are A, yes, B, no, or C, maybe, I'm not sure. And while you respond, I do want to make you aware of a survey that we've set up where you can provide feedback for the 2 morning sessions of the conference. You can find it linked in the slide deck and handouts window of your console. And your feedback is always appreciated, so thank you. All right, we'll do a few more seconds here. And here are the results.
This is really good to see. I love when we see lots of yeses here. That makes my little compliance heart happy. I mean, it's sad because then that means you don't need me, but I'm also really happy that you've got processes in place. All right, I think from here, I am passing it back to Amy.
Thanks. So let's talk about our customized outsourcing, which we would call large client customized. Large client customized outsourcing is offered to those clients that need a team of people, usually 5 or more, solely dedicated to them. And as we talked about earlier, in this type of outsourcing, we work to seamlessly integrate with the client's accounting team. So we typically have email addresses on their email platform. We follow their procedures and communication style, and we are in their teams group. So the program team really doesn't know us as different from their employees. With this type of outsourcing, we have a lot of options to make the work fit the client under both record and report and procure to pay, with various other services included as well. So because everything can be customized, I have brought in one of our typical clients and shown the work that we do for them. So on record to report, they have 14 domestic and international bank accounts with daily deposits. So we are reconciling all of those on a daily basis. We are creating cash receipts for more than about 100 deposits per month, completing all those bank reconciliations, monitoring activity, updating everybody throughout the month. We are booking all of their journal entries, so construction in progress and fixed asset management. We are doing all of their prepaids. They have a lot of contracts, so we are monitoring all those contracts and expensing as needed. There are a lot of intercompany transactions, a lot of calculations for tax liabilities, and then we book their allocations for them. Under miscellaneous, because this is a worldwide client, there are various sales tax and VAT returns. Our job is to populate those, research those, reconcile those sales tax accounts, and get them ready for review and filing by the client. We keep their policies and procedures update. This client has a very large Zendesk help desk ticket system, and we are their tier 1 support. So every single ticket comes through us first, and we triage it up to tier 2, or we take care of it ourselves. There are a lot of required surveys that I'm sure you're all familiar with. We respond to all of those. We do all their balance sheet recs, and various projects come up, and we are typically fully participating. So there's not a lot happening at the foundation that we are not currently involved in. We also handle a lot of their procure to pay. So as the invoices come in, they go through Datros, and then they come into the system. We do that initial review of all those invoices, checking for accuracy and integrity of data. We ensure that the appropriate taxes are deducted from all international invoices. So that gets a little tricky because invoices are coming in from all over the world. So we are trained to monitor those and to understand when taxes should be deducted and when we should be flagging the invoice for further review. There are a lot of direct debits coming out of those bank accounts, and so we verify and process all of them. And we monitor that the accurate bank information is recorded for all vendors. They make all of their payments via ACH, so every invoice that comes in, we have to make sure the vendor has up-to-date bank information. On expense departments, we are maintaining their expense reporting system profile for employees worldwide using Concur. Every employee at this foundation has a credit card. They are all submitting expense reimbursements. We are processing all of those. We create their employee profile within Concur. If they have a question, we provide assistance, and we approve all those reimbursement requests for foundation event guests following their policy and procedure. As I said, we administer and monitor the foundation employee credit card program. Every single employee around the world having a credit card. We're actually in the middle right now of helping them to transition all of those employees onto a new credit card, which was about a 1-year planning and a 6-month process. And then internal reporting to ensure foundation-wide adherence to travel and expense policy. We sample expense reports through Concur. We provide all of the reporting. We are looking for any of those anomalies that we need to bring up to the foundation management attention. And then miscellaneous within procure to pay. So again, monitoring that help desk for worldwide accounts payable and expense department, including questions from the foundation employees, the guests of the foundation, their speakers, when they have an event and they're inviting people in, some of that gets reimbursed. So we set all of that up. We are processing all of their leases around the world, and then various projects that come up. So for our case study for this employee, we responded to an RFP from a very large worldwide foundation. This foundation was steadily growing, but did not want to add any headcount to their accounting department. They had always used a series of consultants, usually 2 at a time, to supplement their accounting departments. And those consultants would stay for 6 to 12 months, as most consultants do, and then be replaced. This foundation decided that they wanted more stability than that. And they wanted to partner with an outsourced provider that would stay. They also examined all of their tasks and had determined that if they outsourced more of their work, instead of just the overflow that they had been doing before, they would be able to focus their team on more high-level analysis and projects. They had some important requirements, though, and issues to consider. They wanted all transactions processed by the provider. That included all the monthly entries for a 5-day close, all of the invoices, and all expense reports. They also had basic monthly tax returns they wanted populated, and they had their customer service platform, Zendesk, as I talked about before. They really took advantage of the opportunity to outsource, and they decided to bring at least 50% of it out to their provider. They are a highly visible foundation, and there are procedures that get them to a clean audit each year that were important to them. They could be flexible with suggestions to make the procedures better, and we offered some suggestions, but in general, they want things done exactly how the procedures say. They spent time before this relationship started updating every procedure and setting up a required training model that we signed off on. They also did not want to move away from their preferred accounting platform, which is D365, because it was integrated with all their other systems. We did not know D365 at the time, but we've become quite expert at the program. It was important to the foundation that they chose a firm that could grow with them. They wanted long-term consultants who would be provided with career growth opportunities so that the employees would stay. They also wanted a firm big enough so that they would have a large enough team and a deep enough bench of industry experts. But they also wanted that family feel, and they wanted a group willing to follow their policy of kind reminders and imparting a feeling of kindness into each email. As we've said before in this presentation, that seamless integration between their team and ours was important. We accomplished this through mirroring their culture, which means we interviewed them as much as they were interviewing us to see if that was a culture that complemented ours. Did we want to embed ourselves in their culture? Luckily, the answer was yes, and they felt the same way. We added value to their foundation. We took a collaborative team approach. We meet with them bi-weekly to stay updated on changing policies, upcoming workload, and issues that other side is seeing. We have been there through a banking change, opening new locations in Africa, and issuing new credit cards to every single employee worldwide. We help them keep procedures up to date on a yearly basis. Along with the biweekly team meetings, the managers on the Moss Adams side and the foundation side meet regularly to talk about what's coming up. And quarterly, we have a steering committee meeting with them and us. All of this is meant to keep us on the same page. We also think it's important that the team know each other. And so we share pictures of our kids and our lives in various meetings. And we have gotten together to do team building activities. We have given them the stability that they were asking for. We started 4 years ago with 9 people on the team, and 7 of them are still here. We've grown that team to 11 people as the foundation has grown. We have had significant impact on the foundation. They haven't had to add headcount to their accounting team to keep up with their growth. We have freed them up to focus on the projects and analysis that they wanted to do. And because they aren't trying to book transactions and work on projects, their books are more accurate. They don't have to continually train our staff because as we add new people, we train them. We also ensure that our team stays cross-trained, which keeps us challenged and provides them extra reassurance. And we have a next polling question.
All right, so the fourth polling question of this presentation is, my organization is struggling to manage the day-to-day funds management and reporting rather than focused on mission delivery. And your options are yes, no, or maybe I'm not sure. And then also feel free to submit your questions for the presenters in the Q&A window. And if we don't have time to respond during the session, we will try to address them during our Ask the Expert session. That is this afternoon. All right, most have responded. We'll do a few more seconds. And here you go.
So that's interesting. A lot of no's. So we have a lot of people not struggling to manage the day-to-day funds management and reporting. And some yeses. So it looks like there are some people that could take a look at some of the tasks that their team are doing and maybe opportunity to outsource so that they can focus more on that mission delivery. Next, we have Brett talking about human capital.
Thanks, Amy. And before I dive in, I just want to say that when we think about human capital and HR and foundations, as I mentioned last week, I was at a foundations conference, and the outsourcing question came up a lot. And so one of the things that I'm going to dive into here in a minute is some of the core processes and procedures and how. But just as we think about the services that Moss Adams provides, so as of today, we do not provide HR outsourcing. As I'll talk about in a minute. But what we do is really work with our clients to prepare and select the right outsourcing provider to meet their needs. And Ariel went through a lot of the approach that her and her team go through, and frankly, it's very similar. So I didn't necessarily want to repeat the process. So I think the first line is really, as you think about what is human capital in HR, right? And I think ultimately it's a set of programs, processes, and practices to really manage the overall workforce. And when we think about this, HR, like finance and all other businesses, have tons of different processes and transactions that could be outsourced. And when we look across some of the core areas of HR, and I'll just kind of cover off them quickly, the talent acquisition, talent management, total rewards, et cetera, there are some that are way more prevalent to be outsourced than others. So, for example, when we think about, talent acquisition and recruiting and employee background screening, employee screening, and all of these things, right? That's a big area of outsource, especially within foundations. Payroll and benefits is another big area that we often see outsourced pretty heavily. Things like learning management, where whether it's compliance training or whether it's career development or learning, again, being able to bring in outside partners or outsourcers to do some of that work is definitely something that we see. And then I guess we get into some of the system components of that, the HR systems, and then the operations area, which really get into more of the employee record keeping and compliance and all of those things. Now, the two areas that we don't see as common really are the talent management and kind of that HR business partner model, depending on how and what type of HR outsourcing you select. But traditionally, especially talent management, when you think about goal management, performance management, those are things that are really traditionally managed internally because there really is more a relationship piece between the overall employee and manager. So what I want to do, I just want to touch on a few of the, actually before I do that, I forgot we were going to take another poll. So Amy, I guess I'll hand it over to you to run the poll. Sorry about that.
All right, that's okay. Thank you, Brett. So the fifth polling question is, my HR organization is currently or considering outsourcing the following processes. And there's a list here that you can select from: employee transactions, payroll, benefits, recruiting, learning and training, risk and compliance, or all of the above.
Amy, I feel like we should play music during this.
I know.
Some sort of fun tune.
Possibly Jeopardy music?
Yeah, that would work. That would
right?
work.
All right, we're going to close this one out here in a few seconds, so get your responses in and make sure to hit submit.
Anticipation is building.
I know. All right, here are the results.
Oh, interesting. Yeah, and this is pretty common. So I'm just going to scroll down to make sure I see all of them real quickly. But payroll is probably by far the number one most common. As we scroll down, we've got kind of a lot of people are doing all of the above. The second, I would say, is probably around risk and compliance, because that's what keeps organizations out of trouble. So that's a little lower than I would expect it, but that just probably means there's more of that being managed internally. And then, of course, we look, benefits is another big one that's usually outsourced pretty heavily. So no, this is really good. So let's go ahead and dive into the types of outsourcing, because I know we don't have a ton of time left. And I just want to cover off on these quickly, because I get asked about these quite a bit. And each one of these has very different approaches and creates very different relationships with between the foundation and frankly their employees. And so the first one we hear of a lot is really the PEO. And basically what a PEO is this is a joint employee relationship with an employer. So the foundation will actually be leasing its employees from a professional employer organization. This isn't as common in the foundation space. It is more common in the private sector. But I did want to bring it up because it's definitely an option. And this, again, from my perspective, the PEO, this is, as we talked about a lot of the things before about having control, not losing control, having the right culture. The PEO, you start to kind of lose a lot of those pieces of that. Now, the good news is that, as you think about things like compensation and benefits and all of payroll and all of those things, a lot of that's taken care of for you. But I would also say from a cost perspective, PEO is much more of a higher cost than some of the traditional other ones. The human resource outsourcing is literally basically taking a lot of the HR function and pushing it to an external provider. So you still own it as the organization. Again, whether that's payroll, benefits, recruiting, that's still an internal function. This is, again, as we talked earlier, where you'd probably still have some sort of internal subject matter expert who would be the liaison between the foundation and the company, but the company ultimately would perform the tasks on behalf of the company. And again, this is, we talked earlier, this is one of those key areas around having the right governance, roles and responsibilities. This is where you see a lot more commonality with kind of the hybrid model in terms of the overall performing certain duties. Now, the administrative services only. So this is really looking at some of the basic transactions, especially when you look at like an employer benefit plan. Some in some cases it could be payroll administration or payroll distribution, and then there's a couple other areas that I would put in there. But this is very much, maybe you have a core HR leadership team and you just don't have the infrastructure or the budget to hire a lot of the transactional based employees. This is a lot of where that work would go, employee record keeping, etc. And then the last one is the HR business process outsourcing. So this is where we're starting to get very selective. So I think as we think about, and Ariel talked about earlier, and again, very similar to our approach is, we come in and do an organizational assessment. We help you with your strategic plan. And then we really start to identify gaps, right? Gaps in capability, gaps in risk. And this is where you're going to start looking at very specific policies, procedures, processes, et cetera, that either you just don't want to manage internally because you don't want to take on the overall risk necessarily, or these are processes that, again, you're still going to manage, you're still going to own them internally, or just things that you necessarily want to push out because you don't necessarily want those capabilities in-house. All right. So again, a lot of times we see HR BPO, especially in recruiting, is pretty prevalent. Again, the background screenings, a lot of those more, I wouldn't say complex processes, but longer based processes that typically take a number of resources to kind of get from point A to point B in terms of managing the process. And there's a lot of, I guess there could be a lot of complexity within it that necessarily you don't want to manage. And so again, this is just looking at, hey, do we have the resource skills and capabilities? Probably not. Is it worth our time and budget to hire them? No, because we could outsource them for probably equal or less cost and get the same amount of value and outcomes. The next area I want to touch on really is kind of getting in. I mentioned this earlier. Oops, went backwards. From a foundations perspective. So in going through and working with a number of foundations, there's probably 6 core areas that we see as most prevalent. I think you all listed one, which is why we asked the question, which is around payroll. Very easy, heavily compliance driven, definitely high risk in missing payrolls. It doesn't make people very happy. And honestly, when you start looking at the payroll complexity, whether you're single state, multi-state, et cetera, making sure that you're taking into account overtime, state, federal regulations, all of these things. A lot of organizations just do it to mitigate risk and to manage compliance. The second area I would say is probably benefits administration. Again, it's not an overly complex necessarily process, but when you start looking at the capabilities and the number of outsources that are available, it also often becomes a less expensive route to actually outsource the benefit administration. They're helping you define the plans that meet your company, administer those plans, do the open enrollment, all of those pieces on your behalf. Again, this is just, do I want to build it internally or is it easy to drive externally? That's another area, again, that we see pretty high on the list, which I was a little bit surprised that I didn't see on yours. Probably the next two that kind of go hand in hand is the transaction and risk and compliance. So transaction, really what we're looking at primarily are things like employee record keeping. But often when you look at record keeping, payroll and benefits, right, all of these three start to come in from a risk and compliance. Now, risk and compliance, and this is actually an interesting one, it may kind of be more of a hybrid approach because some companies just really want to own a lot of that and own their own reporting and all of those other pieces and understanding where those potential gaps are. So they could actually, again, this is where I might have the governance committee and a SME that owns the overall internal processes, really leveraging an external resource to help in terms of all of the state, federal mandated reporting and record keeping and all of that. The other two are, again, are not uncommon, but, these to me, and Amy mentioned this a couple times, are very cultural. I mean, compliance training isn't so much, but, when you think about career development, professional development, unless you're bringing in like an executive leadership development group, when you think about your own employees, a lot of organizations like to do their own learning. Understanding, when you think about curriculum development, and it doesn't mean they may not purchase it and bring it in, but it is a cultural, I would say, synergy when you're actually doing your own career development versus bringing others in. So I think there's a little bit of difference. Compliance, again, usually is outsourced, but from a professional development outside of the executive, it's usually in-house. Now, the third one, or the last one, is the recruiting. And the other one, the reason I kind of look at this as a hybrid is, again, when you think about recruiting, you're also thinking about the brand of the organization and really being able to articulate the employer value proposition, what it means to work here, what are the benefits, what's the collaboration culture like, what's the learning culture. It's really hard to do some of that from an outsourcing perspective, but once you go through that initial that initial identification of the candidate, the screening, the background checking, a lot of those components actually can be outsourced pretty effectively. So I'm going to jump to the next slide because I only got a couple minutes. I'm going to just share a quick case study with you, and then we're going to wrap it up in terms of what's one more polling question. So I'm not going to read all of this, but there was a foundation that we were engaged with. They were across multiple regions. Wasn't a massive foundation, but they definitely had some areas of growth that they were looking into. So when we engaged them, they had around 25 to 30 employees, which did fall, keep them kind of below that 50 employee threshold. But there were a lot of things that they were looking to do from an HR perspective, and they only had one full-time HR person. Right. So as you know, to drive payroll benefits, and I know a lot of you are probably doing it, it puts a lot of burden and stress and constraints on you. So as I mentioned, we don't do the outsourcing work itself, but what we did do is really come in and work with them and follow that process we outlined earlier in terms of looking at their overall organ assessment, helping them develop a strategic plan in terms of what's their focus on the HR outsourcing model. What does it need to be? What are the outcomes you're trying to drive? What are those specific processes and associated policies and procedures that we need to make sure that we're aligned, but also that they did not have the capabilities and did not want to hire the capabilities in to do that. And in this case, it was payroll benefits, some of the employee administration, et cetera. And so what we ended up doing is going through and building an overall strategy for them, and then creating a selection model of what the right outsourcing approach would be, but then what would be the most desirable HRO organization, right? And so one of the areas that we did focus heavily on, and again, not to repeat what Amy said, but was culture, right? We wanted a strong cultural alignment. We spent a lot of time working with them to develop key skills and capabilities to meet and drive certain processes. wanted to understand how that outsourcing organization built relationships with their clients in terms of formulating governance, formulating strong SLAs, what happened when they didn't meet their SLAs, and also driving all of this relationship to some specific outcomes. And then, of course, we also worked with them on a number of other things, which you can see outlined here below, which I won't necessarily get into with time. So, with that said, we'll go to the last poll. Amy, thank you. And then we'll play some music in the background. Other Amy, if you want to hum a little bit, that would be great. Go ahead, Amy. I'm kidding.
So the last poll is, I would like to speak to someone who can advise me on finance and accounting, grant compliance and consulting, customized outsourcing, or human capital management. If there's other areas that aren't listed, you can put them in the Q&A window. And while you're responding, if you would like a copy of today's slides and agenda, you can download them from the folder that says slide deck and handouts. We're also sending them around via email after the conference with a recording of the sessions. All right, and unfortunately we are out of time, so I do want to thank our presenters for this session. It was packed with more information. It was wonderful, so thank you for that. And then also to our audience, this concludes the morning session of our conference. Join us for the afternoon session starting at 12:20 Pacific time. You can click the widget located in the upper right-hand corner of your screen, or use the login link that was emailed to you when you registered. You can also find the link in your calendar appointment, so plenty of ways to get to that afternoon session. Definitely reach out if you have any difficulties. And thank you for joining us. Enjoy your 40-minute break, and we'll see you at 12:20. Thank you.